Okay, so did you happen to see the latest HDFC Life results? It's, quite a bit to take in, I think.
Oh, yeah, actually, I did. They seem to be doing pretty well. I mean, the numbers are definitely something, right?
Right. So, first of all, what exactly do they do? I mean, HDFC Life is everywhere, but like, what are they into mostly?
Well, they're primarily into life insurance. So, stuff like protection, savings, investments, and even retirement plans. Think of it as financial security for people of all kinds.
Okay, so basically, they help people plan for their future, right? So, what do the numbers look like? I mean, revenue, profit, the whole shebang.
Well, their net premium income, according to the report, is around 1,67,726 lakh rupees. And their profit, well, the profit after tax for the shareholders account is 41,494 lakh rupees. So, yeah, they seem to be doing pretty good actually.
That's quite a bit of profit. And what about the new business that they are getting? Are people buying into the policies?
Oh, yeah, definitely. The individual annualized premium equivalent, or APE, which is a key indicator, shows a strong growth of 24%. They are getting more and more new business.
Okay, so that's a pretty good number. So, what's this APE thing anyway? I mean, is it really that important?
Well, so APE is basically like the total premium that is expected to be collected from new policies in a year, considering both regular premiums and single premium policies, if you know what I mean. It is very important as it shows growth in new business.
Okay, that makes sense, I guess. So, it basically gives an idea of their sales growth, right? And what about their assets under management? I mean, do they have a big portfolio?
Oh, yes, their assets under management, or AUM, is about 3,28,684 crore rupees. So, their portfolio is really quite substantial. That is a big number to handle.
Wow, that's massive. So they are managing a lot of money, I guess. And I see something about embedded value. What's that?
Right. Embedded value, or EV, is like the present value of future profits from their current book of business. It is a key metric for valuation of the insurance companies.
Okay, so it's like the future money they're going to make from the policies they have already sold, basically.
Precisely. And their Indian embedded value, or IEV, has grown by 18% year on year. So that's a big growth for them, it seems.
Okay, so good growth, good profit, and strong business. But I also noticed something about persistency. What does that mean?
Well, persistency is basically about how many customers renew their policies year after year. So it indicates the customer satisfaction as well as the value of the insurance.
Right. So that is basically how many people stick around. So how's HDFC doing on that front?
Well, their 13th month persistency is at 87% and 61st month persistency at 61%, which shows a decent customer retention, actually. So they are doing well in terms of retaining customers.
That's pretty good, right? I mean, that shows people trust them. And what about their solvency? Is that a cause for concern?
Oh, no, not at all. Their solvency ratio is 188%, which is comfortably above the regulatory requirement of 150%. So no red flags there, actually.
That's a relief, I guess. And I saw that they were named a good place to work for women. That's nice. I mean, they do take care of their employees as well.
Absolutely. They are one of India's top 50 best workplaces for women by Great Place to Work. They do seem to care about their employees, which reflects on how they treat their customers.
That's good to know. So overall, from all this data, what is the big picture? I mean, is HDFC Life doing well?
Oh, yeah, absolutely. HDFC Life is showing strong growth in their new business, their existing business, and their profitability is also on the right track. They have also made significant investments in customer retention.
That seems pretty solid then. And I guess they also mentioned something about new technologies.
Right. They are actively leveraging technology, digital, and analytics for future growth. They are focusing on a next gen insurance platform called Project Inspire.
I see. So they're not just sticking to old methods, but trying to innovate as well. And what's their plan in terms of reaching more people?
Well, they're focusing on diversifying their distribution channels so they can reach more and more customers. This includes increasing focus on tier 2 and tier 3 cities, which is a growing market.
Okay, that is understandable. I mean, rural and semi-urban areas are where the next growth will come from. So what's their plan for the future?
They plan to maintain leadership by focusing on customer-centric product innovations, expanding distribution channels, and leveraging technology. So they have all plans for sustainable growth, actually.
Well, that's pretty comprehensive. They do seem to have a very focused strategy, right?
Absolutely. I mean, they're not just focusing on numbers, but also on their impact on people, right? And that will lead to sustainable growth.
That makes sense. So, anything else that stood out? I mean, any interesting nuggets from the report?
Well, they seem to be really focused on increasing the awareness about insurance in tier 2 and tier 3 markets. It shows they have a long term vision.
Okay, that's interesting. I guess that's where the growth will come from, right? I mean, rural India is still largely underserved. So, how would you summarize HDFC Life's overall performance for this period?
Well, I'd say they're definitely a strong player in the market with positive growth, good financials, and strategic initiatives for the future. They are in a good space, I guess.
Okay, that paints a pretty positive picture. But the insurance sector is always changing, right?
Absolutely. It's like a game of chess, always requires a strategic mind and you must adapt. But HDFC seems prepared for the future with innovation and customer centricity, I guess.
Well, this was pretty insightful. I mean, thank you for explaining all that. It's a lot easier to understand now.
Oh, no problem. Happy to discuss. Now we wait and see what they come up with next, right?
True, true. Let's see how things pan out. So let's wind it up here then.
Sounds good. I'm curious to see their performance in the next quarter. So let's keep an eye out.